Good morning, everyone. So the topic I have for today is dissolution. So what is dissolution? Dissolution is basically closing down of the business. The business no longer continues with its operations and the economic relationship between the partners end. That means they are no longer partners. For example, ABC are partners in a firm and the firm dissolves. So after the firm dissolves, A, B, C are no longer partners. So that means the economic relationship between the partners end. Now there are different modes of dissolution. So what is the first one? First one is by mutual agreement where all the partners agree to dissolve the firm. Second one is by compulsory dissolution. Third one is by giving a notice. Fourth one is by on happening of an event, and fifth one is by court intervention. So this is the basic difference between dissolution of a firm and dissolution of a partnership. Dissolution of a partnership is also known as reconstitution of firm. So basically in dissolution of a firm, your business closes down and you no longer continue the business. Whereas in dissolution of a partnership, only the business relationship among the partner changes. When we talk about closure of books of accounts, it is compulsory for a dissolved firm to close their books of accounts, but in dissolution of partnership, it's not necessary. The economic relationship in dissolution of a firm ends. Basically, they are no longer partners anymore. Whereas in reconstitution of a firm, the economic relationship just changes, like the way how they share their profit sharing ratio. It's just like that, it just changes. The last one is the business continuation. When a firm is dissolved, you close down the business. So you close their operations and they no longer are a firm. Now in dissolution of a partnership, the business of the firm still continues, the operations of the business still continues. Now we move on to the realization account. Now what is realization account? Realization account is basically prepared on dissolution of a firm in order to close the books of accounts and to arrive at the gain or loss on realization of assets and payment of liabilities. So how do we prepare a realization account? Now the first step in the process of realization account is to transfer all assets. Now as I told that realization account is prepared to close all the books of accounts. So it is necessary for us to close the asset account. Now an asset has a debit balance if I am not wrong. Yeah. So now when we close the book of account, I need to credit my assets so that there is no balance left in your asset account. Closing of books basically means my asset account should not have any balance left. My asset account is a debit balance item, right? So I need to credit my asset account in order to ensure that there is no balance left. So I transfer all my assets to the debit side of the account, debit side of realization account. Now one thing important to ensure is fictitious assets loaned to partners, cash or bank account is not transferred to your realization account. Your fictitious assets are basically lost to the business, so the partners have to incur, so it is transferred to the realization. It's not transferred to the realization account, it's transferred to the partner's capital account. Now in the same way, I have to transfer all my liabilities as well to the realization account. As I told, we have to close the books of account. So there should be no balance remaining in my liability account as well. So I transfer all my liabilities to the credit side of my realization account. Now the third step is to realize the asset. What does realization of asset mean? Realization of asset basically means selling of your asset. Now it is compulsory for a business to sell their assets in order to receive money so that they can pay back their liabilities. Now when you realize your asset, cash comes into your business, you're selling an asset, you get money in your business. So according to the real account rule, debit what comes in, so cash account debit. Now all my assets have been transferred to my realization account. So my asset account does not come into consideration when I pass the entry or something. So when I realize the asset, I debit my cash account and I credit my realization account. Now the fourth step is unrecorded assets. Now these unrecorded assets did not appear in the balance sheet of my company. They are unrecorded, but still they can be realized. That this is a gain for the business. Now we have to remember that realization account is a nominal account. So we debit all expenses and losses and we credit all incomes and gain. So when we sell unrecorded asset, it's basically a gain for the firm. So you credit it to the realization account. Now the fifth one is your liabilities are to be debited to the account. The liabilities you pay, your cash is going out of the business. So as your cash is going out, you credit your cash account, and my liabilities have already been transferred to my realization account. So when I pay back my liabilities, I'll do realization account debit to cash account. Now the next step is unrecorded liabilities. They were not appearing in my balance sheet. Now when I pay back unrecorded liabilities, it's basically a loss for me, and realization account is a nominal account. So debit all expenses and losses. This is a loss for my firm, so I'll debit that. Now seventh one is expenses incurred on the dissolution process. Now basically there are some realization expenses or dissolution expenses incurred by the firm. They have to pay for the realization of assets or payment of liabilities. There are certain expenses incurred because no one would do their work for free. We won't even bring a glass of water if my siblings ask. So that is there. Now the balance in the account after we transfer all assets, realize assets, liabilities and everything. Now the balance in the account may either be gain or a loss, and that gain or loss is transferred to my capital account. So this is how a realization account looks like. Now if you don't know where to transfer your assets on which side of the realization account, basically you need to remember my asset has debit balance. So what you do is transfer it to the debit side of realization account. My liabilities have a credit balance, so I'll just transfer it to my credit side of realization account. Now if you see my two bank or cash account when I pay back my liabilities, and my buy bank or cash account when I realize my asset. If you can see, they are just switched. Can you see? This comes here and this comes here. You just have to switch these when you realize your asset. And then here we have buy partner's capital account, basically for assets taken. If a partner takes over the asset of the business, it will be recorded over here. And then you have buy partner's capital account if the realization account has a loss, if the debit side is more. And here you have two partners capital account if there is a profit, if the credit side is more than the debit side. Now there are some important journal entries. So as I told, for closing an asset, there should be no balance left, so we credit the asset account and we debit the realization account. For closing the liability account debit to realization account. Third one is for realization of asset, cash comes in, we debit cash and then we credit realization account. Now in 11th grade, I'm pretty sure when we sell an asset, we have written bank or cash account debit to my asset account, right? So you just have to replace that asset account with your realization account because your asset no longer exists anymore. It's transferred to the realization account. So you just replace it with the realization account. And for payment of liabilities, you have realization account debit to bank or cash account. Now, what about the loan given by the partner? Now the loan given by the partner has to be paid, right? It's a liability for us and we have to settle all our claims and liabilities. So when you pay your partner's loan, the partner has given loan to the firm. You are paying, your cash goes out, so I credit my cash. My liability, partner's loan is a liability to the firm, and when my liability reduces, according to the modern approach, decrease in liability is basically debited. Now loan to partner recovered. Now it is important for the partner to even pay back the loan that we gave to them. So cash comes in, so we debit it, and my asset decreases. So according to the modern approach, decrease in asset is credited. Now, there are some entries for realization expenses. As I had already told, that there are certain expenses that a firm has to incur during the dissolution process. Now, the first case is when realization expenses are borne by the firm and they are paid by the firm. Now, realization expenses are expenses to the firm. Realization account is a normal account, as I told. So, we debit all expenses and losses. Realization expense, it's an expense, so we debit our realization account. It is the responsibility of the firm to pay these expenses. Alright, and then so that's why we debit our realization account, and it is paid by the firm. If it's paid by the firm, my cash goes out, so I credit cash. Second one is when realization expenses are borne by the firm but are paid by the partner. Now the firm is responsible for paying the realization expenses, so I debit my realization account. It's an expense to me, but my partner is paying it instead of the firm. So the partner becomes like a liability to us. It becomes like a liability. The firm is liable to pay these expenses back to the partner. The partner is just paying it on behalf of the firm. So we credit partner's capital account as they become like our liability. Now the third one is when realization expenses are borne by the partner and paid by the firm. Now the partner has taken responsibility to pay the realization expenses, but instead it's paid by the firm. My partner's capital account is debited because he is liable to pay, but we are paying instead. He becomes like a debtor to us. He needs to give us back money. So my partner's capital account is debited. We are paying. The firm is paying. Firm's cash is going out. So we are crediting it. The fourth one is realization expenses borne by the partner and paid by the partner. There is no entry for it. My partner is bearing the expenses and my partner is paying. It's his own personal expenses. Firm is nowhere related to it. Now the last one is when partner is paid remuneration for completing the dissolution process. When the partner is paid remuneration, for example, they are paid some salary or something like that, if they are paid any remuneration, so realization account debit to partner's capital account. Now, treatment of WCR in dissolution of a firm. Now, one thing to remember is when you're transferring all your liabilities, right? One thing you need to ensure that you do not transfer your partner's capital or your partner's loan to the realization account. All the provisions and reserves related to any asset is transferred. But WCR, what about that? Now, there are different cases of WCR in this thing. So, the first one is when there is no liability against WCR. Your WCR acts like a free reserve, and whenever it's a free reserve, you transfer it to the partner's capital account. Now the second one is when the liability against WCR is less than the amount of reserve. Now the WCR which is there, for example, my WCR is 50,000 and the claim is 20,000. Now 20,000 will go to the realization account credit. As you can see, the amount of liability that I need to transfer it to my realization account. The rest 30,000 acts as a free reserve. So when it's a free reserve for us, we transfer it to the partner's capital account. The next one is when the amount of liability is more than the reserve. So when the amount of liability is more than the reserve, we transfer the WCR to the realization account to the extent of the reserve amount. For example, my reserve is 50,000, but my claim comes to 70,000. So I'll transfer only the amount of reserve that's available for me. I cannot transfer more than that. So 50,000. Next one, the realization account debit to bank is basically the amount of claim that you have paid. That will be the realization account will be debited with the amount paid. The fourth one is when the liability is same as the amount of reserve. For example, my WCR is 50,000 and my claim is also 50,000. So there is no free reserve remaining. So I transfer that 50,000 to my realization account, and then when I pay the claim, it's also realization account debit the same amount of your WCR. So these are some important points to remember. Fictitious assets like deferred revenue expenditure, advertisement expenditure, they are losses, so they won't be transferred. Cash in hand, cash in bank, partner's current capital account won't be transferred. Partner's loan given to the partner, accumulated profits which act like free reserve is also not transferred to the realization account. So that's it for the presentation. Thank you. Any questions? Yeah. Sorry? The goodwill is an intangible asset, right? So the intangible assets are also transferred to the realization account. Okay. Any other questions? We transfer all assets like tangible assets and intangible assets except the ones which I mentioned, like fictitious asset, partner's current account, cash or bank account, like that. All other than that, all assets are transferred, tangible and intangible. Thank you.